2025 was an exceptional year for Euronext. We recorded more than 1.8 billion revenues last year. It's a record year. We have posted as well 7 consecutive quarters of double-digit growth. Our strategy to diversify the group is paying off. The investments we are making in post-trade, but also in the energy sector, are really at the heart of this strong performance for last year. We've also completed 2 major acquisitions during the course of 2025. During the spring, we completed the acquisition of Admincontrol, helping us to continue to grow our Euronext corporate solutions business, which has been seeing a lot of growth over the past few years, with the acquisition of a leading digital governance player in the Nordics and in the UK, complementing our existing offering, but also the acquisition of ATHEX, the Greek market infrastructure, that we completed during the course of November last year.
How do you prioritize where to deploy capital across such a wide portfolio?
We have 3 strategic priorities at Euronext that we have set in our Innovate for Growth 2027 strategic plan. The first priority for us is to grow the non-volume based businesses. We have invested a significant amount of money that we deployed capital into the acquisition of Admincontrol to grow our Euronext corporate solutions business. The second objective for us is to grow and expand our trading and clearing franchise for fixed income, currency and commodities. FICC has been a recent addition to the group. We've expanded into foreign exchange in 2017 with the acquisition of an ECN based in New York. We've expanded into the fixed income space through the acquisition of Borsa Italiana in 2021. And we've expanded in the commodity space with the acquisition of Nord Pool in 2020. The success for us is all about the growth of our FICC trading and clearing franchise. And finally, the third pillar is to continue to build upon our leadership in trading in Europe. Basically, when we deploy capital, we assess what is the return on capital versus what we consider our cost of capital. Our cost of capital, we look at 3 to 5 years ahead. And if we believe that the financial projections we have in our model can justify the price, then we do the deal. If not, we are also keen to pass on many opportunities. And in the past, we have done probably fewer mistakes than many of our competitors because we did decide not to bid on assets that we consider were not at the level of expectations when it comes to our return on capital employed. This year, we have, I would say, 3 main strategic projects that we are about to deliver. The first one that we are going to deliver next week is the migration of the open interest that Nasdaq held in Nasdaq Clearing and that will be transferred to Euronext Clearing. We announced a deal with Nasdaq about a year ago, and this actual business will be part of Euronext Group starting from next week. Number 2, we have as well an expansion of our repo franchise across Europe. So we will be more and more active starting from June into a European denominated repo. And the third item is that we are expanding our post-trade solutions and our CSD footprint across Europe, and we are going to offer settlement facility for customers in France, Belgium, and the Netherlands starting in September this year.
Where are you seeing the strongest client demand?
There is strong client demand for our energy trading business and solutions. We bought Nord Pool in 2020, but since then we have expanded the company all across Europe. It used to be a Nordic and Baltic business. It's now a really pan-European business. We are present in 16 countries across the continent. We have as well built a full-fledged data business. We are also servicing other power exchanges in Europe that do not have their own technology solution by providing Nord Pool infrastructure to them. With this deal that we have signed with Nasdaq, it's an opportunity for us to expand significantly our addressable market into the power derivative space. We were present in the physical markets. We are expanding in power derivatives. This is opening a new range of opportunities for us. And then if you take our commodities franchise, we have as well ambitious projects to grow this year in the dairy space. So we are launching dairy futures starting in September. And actually next month, we will launch container freight futures in Euronext.
How do you balance volume-related trading revenues with more stable, non-volume businesses?
The strategy of Euronext is to accelerate the growth of the group and to provide better recurring revenues to our investors. So we will continue to look at opportunities to deploy capital in order to accelerate the delivery of those projects and to allocate capital into this project if we find opportunities at the right terms which could accelerate the delivery of those projects.
How do geopolitical dynamics influence your diversification strategy?
In the current volatile geopolitical context, Europe is providing stability and predictability to investors. That's why we are seeing some inflows on European equities over the recent quarter, is because Europe is seen as a safe harbor in the world we live in because of the predictability of the political and the regulatory framework and development. What we want to achieve is to make Europe an easier place to invest. Europe has been seen for long as fragmented. We want to deploy our resources to make Europe a place where it's easier to invest for foreign and global investors. That's why we are consolidating European markets, both on the exchange side, but also on the post-trade side, which is a source of friction for global investors. And then when it comes to our own product roadmap, indeed we are helping. We have huge needs in front of us in terms of financing in Europe to finance the energy transition, to finance the defense that will necessitate tens of billions of euros to be raised on the financial markets. Our job at Euronext is to provide a safe environment to train companies in order to for them to have access to a global pool of investors, to put them in meeting with global investors, to give investors the right tools for them to invest into European companies, so that means the right financial products, indices in particular, ETFs that could direct the big capital flow into the company that needs to raise capital. We have a very strong pipeline for this year, in particular in the defense sector, where Euronext has a role to play to accompany those players in raising capital from global investors.